So welcome, I'm Andrew Gall. I lead AIMAVAR, which is an advisory firm which has been working for about 20 years now with large corporates in their corporate venturing, innovation, and sort of investment space. And I've known Jacqueline for, we were just talking as we started, I've got an 18-year-old and she knew when she was a little tot. So we've nearly getting on for 18 years and that now. So we've known each other. We're going to have, so we've had some brief introductions of those who've just joined us. In terms of the context and objective and that for today, we're going to be talking about changing value chain, how the financial models are changing and how risk is being impacted. And Jacqueline's our expert on that today. I've got my colleague, Samantha Northies, who's on the call on that with me. And we're going to be, if you've got questions or you've got comments, we'd ask you to maybe post those in the chat as we're going through the presentation. At the end, then we'll have plenty of time, hopefully, for discussion and sort of questions. Now, for those of you who are looking on laptops, you can use your phone while you're doing this. Open the camera on your phone, and you can scan the QR code, and that will take you to the content that I'm going to be briefly sort of discussing as we sort of go through this, or you can connect to me on LinkedIn. So let me just give you some brief context to what we're talking about. As I said, I've been in this space about 20 years, working around open innovation, corporate venturing, corporate venture capital. And just over 2 years ago, I wrote a book called Purpose to Performance. And really the subtitle in terms of innovative new value chains is what we're going to be sort of discussing as the framework in that here today. And what do we mean by that? It means that by connecting different technologies, different startups, we can see that there's new value chains and disruptive things happening within this space, and financial services and the connections through that is going to be really important. So just a few examples to give the context. So in the energy space, Horizon 1 areas are producing electricity, power through large infrastructure systems. We've seen, Horizon 2 incremental change with new devices, energy saving devices. And as we're seeing now, distributed energy, electric vehicles, that's changing the whole ecosystem in that space. We're seeing in health, moving from caring for sick people in hospitals to new devices, new pharmaceuticals, and the importance of data in that value chain. And then in professional services, insurance, consultancy, financial services, we're seeing mobile payments. But the importance of data throughout these transactions is becoming really important. And one example I'm going to talk about, and Jacqueline's got some experience in this, but also in these other areas. So Internet of Things, transport, energy. We're seeing the transformation of the internal combustion engine to electric vehicles, to autonomous electric vehicles, to new energy systems, really disrupting a whole range of different industries. And this is the basic framework, the sort of simple model that I outline in my book, really saying that you've got a device, an electric car, a health monitoring device, a piece of machinery, which is now throwing off huge amounts of data, lots of information. And the finance models for those in terms of how you pay for the product and the service, how you insure it, how you exchange value across these value chains is changing considerably, and the relationship with the customer. So you're not necessarily buying a car in this example. You might be renting it, you might be sharing it, you might be paying for it when you're using it. And so for me, bringing together technology, bringing together startups, bringing together corporates is going to creating these sort of star new value areas. And this is also a global phenomenon. So from Silicon Valley to Europe to Asia and China, we're seeing these technologies and these sort of solutions and business models coming up all over the place. And for corporates particularly, I think it's really important that they have this global view, not just a narrow venture capital in a particular geography sort of perspective. So taking the transport and energy into a little bit more detail, as I said, myself and Samantha here in the pictures, we've been running over the last couple of years a range of different programs in this sort of space. Workshop at Williams, which I'll talk a little bit more about. We've taken executives to Oslo, where we've looked at the penetration of electric vehicles and devices and that there. And also Samantha and I were in China in November, looking at taxis, battery sharing, new facilities and that are happening and that there. And just out of when we sat together with a group of different corporates, startups, and investors in Williams last year, we broke down this value chain in terms of energy production, power supply, connecting to the grid, battery services, battery storage, and then different customer types: fleets, shared ownership, public transport, private cars. And the yellow blocks on this are the areas that we went into more detail with, and just pertinent to today's topic, really, things like new asset classes for how do you finance this infrastructure, which is going to be diverse across the different areas. How do you finance batteries? How do you finance the charging of those? What's the total cost and the infrastructure cost of these different areas? And as you can see, in these areas, we're going to be throwing off lots of data, lots of financial information, and the whole ecosystem has now got a lot more information and a lot more risk in it, which is in this whole ecosystem, and very different risks to the previous environment that we were talking about with internal combustion engines. And as Samantha and I work in these sort of spaces, you could almost do a word replace in this for vehicles to medical devices to industrial machinery, and that in these areas. So we've got a lot more resources on our YouTubes from our previous discussions, and hopefully we're going to have this one as well online, so you'll be able to watch and share this with colleagues, and also in podcast form. So I'd like to properly introduce and welcome Jacqueline now to give us some introduction of that about herself and Munich Re Ventures. So over to you, Jacqueline.
Thank you, Andrew. So thanks all for coming. I was excited to see the list of folks who were joining and the backgrounds, because it looks like we all share, or many of us share, a lot of similar interests. So thanks for joining us. It's nice to be on a more intimate sort of conference situation right now. So I lead Munich Re Ventures. So we're the strategic corporate venture capital group for Munich Re, which is one of the world's largest reinsurance companies. And I think many of you, based on the where you're from, know what reinsurance is, but I'll just give a quick background as to that. So I think about what Munich Re does as being kind of two different types of things, because they also do a little bit in more primary insurance. So on the one hand, companies that you'd be familiar with in the US, like a Progressive or a Geico, that have an auto insurance, say, book of business, or a home insurance book of business, they don't always want to take all that risk themselves. And so they offload some of their risk to a reinsurer. So in that respect, we're like an insurance company for the insurance company. The other thing that Munich Re does is there are many situations where we write or reinsure, or in some cases on our big balance sheet, fund a specific project or a specific company. And in that area, it's quite interesting, because when you have new projects, like let's just take, for example, space. And we now have so much more, if you compare to 20 years ago, we now have so much more private company space activity. But even in the early days, those companies need insurance, or particular missions need insurance. And Munich Re has a more than 10-year-old space business that writes those situations. And so there needs to be risk transfer around human invention and human innovation when we're trying to do big things as humans. So there's both an aspect of Munich Re that is there for the traditional thing that most people understands when really bad things happen, particularly natural disasters and catastrophes, and kind of goes above what a primary carrier wants to be insuring. And then there's this other part of Munich Re where, because of our large and global balance sheet, we take these other sorts of risks around this more positive side of humans, which is around human invention, as I described. So we got started in 2014. And so prior to that, back in 2008, I had my first exposure to insurance when I was hired by The Hartford, which is a primary carrier, also in Connecticut, which used to be sort of the insurance capital of the United States. And in 2008, I moved my family from San Francisco to Hartford and joined the insurance industry for the first time. And there I formed and led all the innovation activities for the Hartford and had both a venture capital group and an innovation studio. And so we were one of, if not the first, direct strategic corporate VCs in the insurance space. And this was long before InsurTech was a thing. But during my time there, a number of the seeds for what has become the InsurTech space started, including the formation of Weatherbill, which became Climate Corp, and ultimately sold to Monsanto for more than $1 billion, and kicked off sort of the InsurTech space and the AgTech space, mostly because they figured out how to harness being something called an MGA, which allowed them to get as close to being an insurance company as possible without having their VC investors take on the balance sheet risk. Do you want me to go in now, Andrew, and talk a little bit about Munich Re Ventures?
Yeah, sure. Go ahead.
Okay.
Do you want me to put that slide up?
Yes, please. Thank you. So we got started in 2014, and at that point, we were only doing corporate VC in partnership with Hartford Steam Boiler, which is a subsidiary of Munich Re, that is the largest insurer of equipment. And they saw what was happening at that point in the industrial IoT space and realized that it was going to have important meaning for their business. So while you might think that we got started being focused on InsurTech, that is not the case. We got started being focused on industrial IoT, and all of our initial investments were in the industrial IoT space. But as we were getting started, Munich Re was also beginning its innovation journey and figuring out how it wanted to structure and approach innovation on the business side for its purposes. And so not long after we got started, we started to expand what we were doing. And if you fast forward to today, we're more than 500 million, so 10x that initial amount in what we call fund equivalent. And we are a captive venture capital platform, so we can spin up new funds. And we currently have 4 funds. 3 of the funds each have an internal limited partner. Hartford Steam Boiler, our first one, the reinsurance group of Munich Re, and Ergo, which is the primary carrier, or sort of retail insurance company of Munich Re, mostly in Europe and a little bit in Asia and the Middle East. And so we have those three separate funds. And then we have a new fund, Munich Re Ventures Fund 4, which is also for the reinsurance group and invests a little bit ahead of them. 2 of the funds, HSB and Ergo, are committed capital, while the reinsurance group's funds, we call it a fund equivalent. And it's quite, it's a nice size. And in aggregate, we end up looking at it from a fund equivalent basis, as I mentioned, as being more than 500 million. We are extremely strategic investment theme based. So within each theme, we work with businesses and our investment committees to agree on what our themes will be. And each of those themes has a strategic business partner with whom we work very closely internally to develop the theme, and who also works with us to add strategic value to the startups once we've invested, and also to gain the strategic value for Munich Re once we've invested. We are a little more than 20 people. We've got 12 or 13 professional venture capital investors, all of whom have been VCs or CVCs before. We also have an ops team, and we have a growing and really critical portfolio development team, which really is on point for developing those strategic investment theses in partnership with the businesses and our investment professionals, and also for helping to facilitate both when we invest and beyond when we invest, the relationship between the business and the portfolio company. A flavor of our investment themes. I did want to just highlight that on our page, and it kind of goes along with what I said in the beginning, which is, we got started with industrial IoT, but because we're a reinsurer, one way or another, Munich Re is, involved in most things, when you look out your window that go on in this world, and so figuring out what to focus on is quite challenging because most things are relevant, but we really focus on those things that are the most significant. Have the most significant impact on our business now or going forward because of, in part, the way it's impacting the world. So in addition to IoT and InsurTech, we have mobility and digital health. We've got energy transition, next generation transportation, which includes space and urban air mobility, cyber. We also have this great business in Munich Re called technology adoption. Well, they're called New Tech IoT, but our theme has this kind of long name called Technology Adoption Enablement. But basically, this company is set up specifically to work with startups who have mostly a machine learning or AI-driven focus, but in a number of different verticals. And they basically de-risk the go-to-market strategy for those startups by providing sort of a performance guarantee around what they're doing to help to de-risk that initial purchase moment for some of their customers. And that's been a wonderful way for Munich Re to continue to access the startup ecosystem and add a lot of value to it.
Jacqueline, so just in terms of the value chain that I was talking about earlier and the Internet of Things and these whole ecosystems, what's your perspective on, you're insuring space travel and that ecosystem? What sort of things are you seeing in the IoT space that different players along the value chain need to be thinking about? It's good from the startup you just sort of mentioned, but any other areas in terms of the automotive companies, the energy infrastructure companies? What sort of insights are you seeing in how the data is driving these industries?
So I'm mostly going to talk about the way in which we see it intersecting with insurance and other sorts of financial models. And in many ways, I'm not space and some of the more energy related part, but if we look at IoT and we look at mobility, for example, there's a lot of similarities in what's happening there. So I'll talk about mobility because it's probably something that people are quite familiar with, and that has an IoT component to it as well. And so there we have, as you all know, we have tremendous changes in technology in terms of the vehicles and the kind of data and the different technology going into those vehicles and the data that's being spun off of it. We also have many changes in ownership of those vehicles, right? Starting back, more than a decade ago with Zipcar. We also have Uber, one of our portfolio companies, Fare, which is a different way of sort of having subscription service to your vehicle. So vehicle ownership is changing dramatically along with the data that's being generated. And so when you look at that from an insurance standpoint, it has the potential to change almost everything across the value chain. So you have obviously changes in data coming out of the company, which allows mitigation of risk, right? Because when that data is fed back into a driver, whether it's a driver in a commercial fleet or a driver as a consumer, they can then make changes in their behavior, and it allows them to there to be a reduction in risk. You also have that data which allows you to write business differently, right? You can underwrite it differently, you can potentially price it differently, and then you can a whole slew of new products. So when I think back to my early experience in insurance, particularly on the consumer side, you really had, like, say, consumer auto. You had one product, and that product was a 6-month product. It looked the same for everybody. And obviously, you have great pooling impact. And it priced mostly, or underwrote mostly based on things like credit score, which turned out to be highly correlated to claims. But now, with different data, and also these different business structures, you can take that insurance product and you can completely break it up, right? And you can start to insure on demand. You can, so just for a period of time, which is relevant for, say, an Uber or Waymo, you can start to insure very discrete things instead of, say, a whole, this is more relevant perhaps outside of auto, but you can insure things that are at a sub-level from what your normal policy used to be. And you can do, these different durations. And so you can break it up into all these different pieces, and then you can put it back in different ways. We have a portfolio company, Trove, that's started as single item coverage for the home, but it turns out that the way that they broke apart the insurance product lended itself very well to mobility and the new mobility models. So that became very relevant for their business. And so they're also the insurance partner, for example, for Waymo, because they were able to break it apart like that. When we look at IoT, or sorry, one more thing about mobility is because of the changing business models around ownership, you can anticipate that the insurance customer is going to completely change. And so back when I was at the Hartford, 12 years ago, we were debating, is auto going to stay with consumers, or is it going to become an insurance that is fleet insurance? Or is it an insurance where it's actually something that the OEM is offering to their customers because the car is now full of so much technology, and it's really almost a product liability situation, particularly when you're in an autonomous vehicle situation. And a lot of this is still somewhat unclear, but we see OEMs, we're engaging in the space and in the mobility space and looking at insurance quite significantly, particularly if they have autonomous vehicle or if they have ride sharing or sort of modern leasing toward sort of business model that they're also experiencing. And so we see a lot of activity on the fleet side in particular as car ownership moves from individuals to fleets. And then also those fleets are used for a certain period of time. And so the on-demand insurance becomes more important. When we look at IoT on the industrial side, it's quite interesting because you have, and many of the same things are at play, but you again have this data coming off of your machines or your equipment, and that can be fed back in a loop to whoever's operating that equipment in order to mitigate risk sooner. So we have a portfolio company, Augury, that looks at machine health. And so they're able to read what's going on with the machine and see very much sooner than you normally would when it might break down. And HSB recently announced a guarantee around that, again, kind of an updated version of equipment breakdown. You also have a situation where all different sorts of machines lead to different outcomes. So if your line goes down, you have a situation where you lose revenue. And so we have, actually, one of our portfolio companies was bought by HSB and Munich Re, and that's Relayer. And so they are looking at much broader sorts of business models around industrial IoT, and then HSB and Munich Re are helping to basically guarantee different sorts of business outcomes. And Relayer is a technology company putting in place different industrial IoT solutions. And so when you have industrial IoT, you have different data for underwriting, for claims, and for pricing, but you also have different services that go along in partnership with the insurance in order to mitigate risk and to make sure that you are able to get that advance warning, you're able to act on it, and you're able to follow through and reduce those claims. And so that's part of what HSB has been doing with its IoT services and with its acquisition of Relayer, is beefing up that services part in conjunction with the insurance.
Great.
So
Okay.
I could talk forever on this, but
No,
hopefully that's helpful.
This is good stuff. So I've got one more question. If others, I can see one on the chat there. Put your comments or questions and that into the chat, and we'll open it up for chat in a moment. So Jacqueline, just one more question from me in terms of the pandemic and that at the moment impacting portfolios, impacting ventures, impacting the zeros. Brief comment from you on how that's maybe impacting your portfolio, or how you're seeing the investment market in that at the moment.
Thank you. Well, I would have had a different answer for you probably a few weeks ago than I do now, given that we've got a surge going on again in the U.S. But in general, I think what we saw was there's enough VCs around who also lived through the 2008 global financial crisis, and even those like myself who lived through the dot-com bubble burst. And so I think there were no illusions when the pandemic hit in the venture community about what was going to happen. And so there was very quick action taken by the companies, the investors, and us, of course, as a part of it in our role, to quickly help to create runway for the startups in order to get through a very long period. And so you saw a flurry of obviously changes in business plans, and also investment rounds, usually convertible notes, that were bringing capital into startups. We also saw significant equity rounds happen for some later stage companies in order to do that. And also a lot of new companies still getting formed. I think we're going through a period here of a couple months where things are going to be pretty slow as the world, and in particular, the venture community, given our location, comes to terms with what might be a longer impact here than we had expected. So we think things are going to be slow. We still haven't seen the full impact of valuation, because, as I mentioned, a lot of that was convertible notes, and things haven't been priced yet. But as things start to get priced, coming out of the summer and going into next year, then we'll see the reality of the valuation impact. For us, because we're very theme-based, it's not like we suddenly get to be focused on things that are impacting remote workers and certain types of life health things different than what we do. But we have seen for our portfolio, for example, we have an investment in a company called Babylon. They do a lot of remote health sorts of things. They've found that this is accelerating their business model in the IoT space. The same thing in terms of, you now have certain types of companies that are running at maximum capacity, they're manufacturing. They also aren't as able to get into some of their facilities as they had been. And so there's a trend towards more remote machine monitoring, which is, again, an accelerator for IoT. And we've seen that true in our portfolio companies. Also on the insurtech side, to do insurance now, you must be digital. And so those companies that were around enabling insurance companies to be more digital, or were being, carriers themselves, they've also seen, after a blip, again, an acceleration.
Yeah, good. Yeah, we did one of these seminars a few weeks back, and we had Alex McCracken from Silicon Valley Bank giving insights from their quarterly sort of report. And there were some interesting things there where you started there, Jacqueline, in terms of the experience of CEOs that have been through this. There was a very large proportion of them hadn't been through a recession, and then the proportion of the investors that have been through it. So I think we've gone through that phase now of rationalizing and raising a round. One of the ventures that I was a director of, we raised a round in April to give that venture a 12 to 18 months runway in that now, because I think we're going to see this sort of shaping up over the next number of months.
Mm-hmm.
So thanks very much for that. Done quite a number of these since our sort of lockdown. So sessions with like Alex McCracken, I said, from Silicon Valley Bank, from BMW, from Williams, from investments, and that coming from China. So we've got a whole list of those which we'll circulate to you. Upcoming, we've got some more of these roundtable sort of discussion types. We've got around intellectual property and creating and spinning out intellectual property with Rouse, which is in 2 weeks' time. 2 weeks after that, we've got investing during a pandemic. So how do you get new deal flow? And how do you take transactions through that sort of process when you can't physically meet people and when you haven't necessarily been going to their sites? And Henkel Tech Ventures are going to be speaking about that. And in early September, we've got Shell Ventures, so a bit sort of connected to this mobility and energy space and that again. So we'll circulate those sort of themes and that around to you. But feel free to reach out to myself or Samantha to discuss areas around your corporate venturing, your innovation, or any of the themes in these areas. We don't just do mobility, we don't just do China. There's lots of other themes which are in this sort of space. So thank you very much again, Jacqueline. Really good to see you. Sorry we're not doing it physically together like we've done in Silicon Valley before, or in London, or in Shanghai, in our skylight bars and all that we've been in. So thank you very much for Jacqueline. Thanks very much for everybody else who's been on the call. Really appreciate your interaction, and thanks very much. Have a good morning, have a good evening, depending where you are on that within the world. Thank you.
Thanks, Andrew. Thanks, everyone, for joining.
Thank you.
Yeah.
Thanks both for your time.